Yes, manufactured homes can be financed in Kentucky, but the details matter. A manufactured home is not always underwritten the same way as a regular stick-built home. The property, the foundation, the title work, the age of the home, and even whether it is a single wide or double wide can all affect whether the loan works. This is one of the most common questions I get from Kentucky homebuyers. Can I get a mortgage on a manufactured home? The short answer is yes. The practical answer is yes if the home, the land, the loan program, and the documentation all meet the rules. So in this video, I am going to walk through the main things Kentucky buyers need to review before making an offer on a manufactured home. Hey, this is Joel Lobb, mortgage loan officer here in Kentucky. If you are looking at a manufactured home, mobile home, single wide, or double wide anywhere in Kentucky, I want you to understand this up front. Not every manufactured home will qualify for regular mortgage financing. That does not mean manufactured homes are bad. In many Kentucky counties, especially in rural areas, they can be an affordable path to homeownership. But lenders, FHA, VA, USDA rural housing, conventional financing, and Kentucky Housing Corporation each have guidelines that must be reviewed before you assume the home can be financed. The first major issue is whether the home is permanently affixed to the land. Most mortgage programs are looking for a manufactured home that is attached to an acceptable permanent foundation system, not something treated as temporary, movable, or personal property. FHA-related foundation reviews commonly focus on HUD's Permanent Foundations Guide for manufactured housing, and conventional guidelines also require the home to be attached to a permanent foundation system. In plain English, if the home is just sitting on blocks, has an older foundation problem, has missing support documentation, or was not installed properly, that can become a serious financing issue. The second issue is whether the manufactured home is treated as real estate. For a mortgage, lenders generally need the home and the land to be treated together as real property. Kentucky's vehicle titling guidance says that when a manufactured home is or will be permanently affixed to real estate, the owner may file an affidavit of conversion to real estate with the county clerk. Kentucky Housing Corporation also says manufactured homes can be eligible for KHC financing, but KHC requires an affidavit of conversion to real estate and a copy of the title, which can be completed on or before closing. That is a big deal. If the title has not been handled correctly, or if the manufactured home is still treated like personal property, that can delay the loan or stop the deal completely. The third issue is the foundation and installation requirements for the specific loan program. FHA, VA, USDA, conventional, and KHC are not all identical. USDA guidance for its single-family housing guarantee loan program says manufactured homes must meet program requirements, and it specifically notes that wheels, axles, towing hitches, and running gear must be removed. USDA also says the unit must be taxed as real estate and properly recorded with the unit and site. With USDA, it is not just about the structure. The property also has to be in an eligible rural area, and the buyer still has to meet income, credit, and underwriting guidelines. So the home, the land, the borrower, and the location all have to line up. The fourth issue is single wide versus double wide. Do not assume they are treated the same. Some lenders are more comfortable with double wides. Some investors have overlays. Some programs may allow single wides if the property meets the full manufactured housing requirements, but that does not mean every lender will accept every single wide. This is where lender overlays matter. Just because a broad agency guideline may allow something does not mean every lender or investor will approve that exact property. The fifth issue is the age, condition, and history of the home. HUD manufactured housing standards changed in 1976, and conventional guidelines generally require the home to comply with the Federal Manufactured Home Construction and Safety Standards established June 15, 1976, with evidence such as HUD certification labels or data plate documentation. Older mobile homes built before those standards are usually very difficult and often impossible to finance with regular mortgage programs. Condition also matters. The appraiser and underwriter will review health, safety, structural, and marketability issues.
Missing skirting, roof problems, foundation concerns, unpermitted additions, decks, garages, structural modifications, utility issues, or title problems can all create financing problems. Here is the bottom line for Kentucky buyers. Do not assume a manufactured home will finance just because it is listed for sale. Before you spend money on inspections, appraisal fees, or earnest money, get the property reviewed. The questions I want answered early are simple but important. Is it single wide or double wide? What year was it built? Is it permanently affixed? Is it taxed as real estate? Has the title been converted? Is it on owned land? Is it in a USDA eligible area? Are there additions, decks, garages, or structural modifications? Those answers can make or break the loan. Manufactured homes can absolutely be financed in Kentucky, but the file needs to be structured correctly from the beginning. The loan program matters, the lender matters, the foundation matters, the title matters, the property condition matters. This is Joel Lobb, mortgage loan officer here in Kentucky. I help Kentucky buyers compare FHA, VA, USDA rural housing, KHC, and conventional loan options. Call or text me at 502-905-3708 and let's review the property before you make an offer.